It's a Monday, start of a new week, and as usual, we take a look at business issues on a Monday with Chris Gibbons, our business analyst. Chris, a little bit of a sense of deja vu here. This time last week, we were talking about, let me think about it, problems in the Ukraine causing all sorts of stuff in the market. Here we are this week. Same old, same old.
Good morning, Jeremy. Yep, certainly words to that effect. It was true a week ago, and it's true again today. What's happened the last 7 days is we've seen a further build-up of Russian troops on the border with Ukraine, Russian separatist rebels inside Ukraine, evacuating their women and children to neighboring Russia, and an increase in shelling between the rebels and the Ukrainian government forces. And latest reports this morning say that American President Joe Biden and Russian leader Vladimir Putin have agreed in principle to a summit, a French proposed summit, in a bid to try and defuse the situation. The market's still very unhappy. US markets in particular are down year to date. Nasdaq has dropped over 13%, S&P 500 down 8.75%, Dow down 6.2%. London, however, the FTSE there only down 1.75%. Moscow's ruble-denominated MOEX down 3.4% on Friday evening, and it's only down 1.3% over the past month, 1.5% over the past 12 months. I tell you what, I've seen any number of reports from Moscow, Jeremy, saying that there is no way Putin will actually go ahead and invade. It would be disastrous for Russian business and would also be deeply unpopular because many, many Russians have relatives all over the Ukraine. And then contrast all of those very negative numbers with the JSE All Share. We're up 3.6% year to date, at 2.8% month to date. Top 40 slightly better than that too. And much of that is rising demand for our commodities, but we're also seeing some good numbers from several of the big players in other sectors.
But the Rand also continuing to make some really nice gains as well, Chris.
No question, and unlike last week, we do now have a clearer idea of what's going on. As of Friday evening, the Rand up 5% year to date against the dollar, 15.12 thereabouts on Friday, slightly better than that this morning. We were beneath 15 briefly at one point last week. We're up 5.6% against the euro, 17.12 or so, 4.7% of the good against sterling, 20.54, 20.55 thereabouts. And the reason is that foreigners have been, as we suspected, piling into South African bonds. And why wouldn't you? With a yield of just over 9% compared with what, 2%, something like that, if you're lucky in the developed world. We are supposed to be risky, and there's no question that we are, but the supposedly safe havens, like the dollar, well, you know, all that stuff in the Ukraine going on, they're looking pretty risky as well.
Yeah, but even with the firmer Rand, that price of oil is hurting, isn't it?
You can say that again. Brent crude up more than 20% year to date. We're looking at a hike of around R1.25 per litre next month, if nothing changes dramatically over the next few days. And that's the forecast from the AA, citing data from the Central Energy Fund. Diesel set to increase by about R1.29 per litre. These are record highs and not all to do with Ukraine. Rather more to do with economies recovering from the pandemic and seeing a sharp increase in demand. The problem is that production and logistical difficulties are making it hard to meet that demand, so the price goes up.
Well, I suppose somebody who won't be really struggling to fill up his vehicle, whichever one he chooses to drive on a particular day, will be Christo Wiese. I see he's just come to a settlement over the whole Steinhoff debacle.
Yep, as part of the broader Steinhoff settlement package, Wiese will receive 7 billion Rand, 3 billion in cash, and the rest as a 5% stake in Pepcorp. Sounds like a lot? Well, it is, but remember that Wiese used to own 52% of Pepcorp before he swapped it for a 20% stake in Steinhoff. Those shares lost more than 95% of their value when Steinhoff collapsed, leading to a claim by Wiese of $4 billion, about 60 billion Rand. So he's getting a fraction of that. Quoted by Fin24, Wiese says he decided to accept the reduced amount given his age. He decided he did not want to be in litigation for the next 7 years or so he made the concession. One thing to note, Wiese says that both he and Steinhoff are deadly serious about pursuing ex-CEO Marcus Jooste, but he is quite sanguine about the amount of time being taken by the National Prosecuting Authority to get their act together. He reminds us that the German authorities took 5 years to gather their charges against Steinhoff and against Marcus Jooste.
Yeah. You mentioned some good company numbers. Truworths has got to be in there, I would imagine.
Quite right. Trueworth's share up nearly 10% in the middle of last week after releasing its results for the 26 weeks to end December. Market had been expecting somewhat gloomier figures, given a trading update earlier in the year pointing to slowing sales growth. But what we hadn't seen was a significant improvement in the gross margin at Trueworth's. Retail sales up 2%, but gross margin up from 51.5% to 53.6%. Very impressive. And that filters through the P&L, of course, turns into an operating profit increase of 32.5%, 2.5 billion rand. Sales up, gross margin up, expenses down. Bingo. What's not to like? Especially with a strong cash performance and a 29.3% increase in dividend, 300 cents per share. Trueworth's still way off its 3- and 5-year highs, but the recovery now starting to look quite promising.
Another sickly patient who looks to be returning to health is South Deep Gold Mine, Chris.
South Deep's quite a story, Jeremy. It's the last South African mine in the Goldfields group, and it's the last great South African mine. Mineral reserves of some 32.8 million ounces. If you prefer that a different way, that's 100,000 gold bullion bars. That's an enormous amount of gold still to be mined at South Deep. Absolutely huge. And of course, that compares with what remains, almost nothing, of all the other giant mines which made up the Witwatersrand. However, it has been in development for a number of years. It has been chewing cash at a furious rate. At one stage, it was burning through 100 million rand per month. And finally, as we look at Goldfields' annual results for the year to December 2021, we can see a 29% increase in attributable production to 293,000 ounces. And CEO at Goldfields, Chris Griffith, reckons that will improve next year. They should be able to top 312,000 ounces in 2022. So shareholders in Goldfields definitely breathing a sigh of relief.
Also looking pretty healthy, if you'll forgive the pun, is Discovery.
Indeed, the country's largest private health insurer says it's expecting profits to increase by as much as 10% for the half year to end December. Part of that, strong client retention, pretty much as you expect during a pandemic, but also a good performance from newcomer Discovery Bank. And all of this despite COVID-19 claims of 3.4 billion rand. Headline earnings at Discovery could be up by as much as 70 to 80%, about 1.147 billion rand.
To continue with the whole medical metaphor, one patient who looks like they should be in intensive care actually at this stage is Mastermind.
Yeah, no doubt about that one. Mastermind has been in trouble for the last 3 years, Jeremy. It owns Game, Macro and Builders, and in turn is itself owned by Walmart in the United States. Short update to the market on Friday said that it's been badly hit by the July rioting and looting, as well as the timing of insurance payouts related to that unrest. As a result, it's expecting to report a net loss of between 2.14 billion and 2.4 billion for its full year to December 26th. Mastermart's market cap on the JSE is only just under 12 billion, so these are very significant numbers. The group's also been hit by COVID-19 liquor trading restrictions, supply chain disruptions, and the effect of global supply shortages. Some 43 of its stores were damaged during the July rioting. Walmart's already parachuted in 3 top American executives to try to effect a turnaround. I have to wonder how much longer they're prepared to give the business before someone looks at the numbers on the ICU monitor and decides it's time to turn the life support machine off.
Well, somebody who looks like they may be needing some intensive care and a little bit of attention is Iqbal Survey.
Along with a bunch of companies in his Sekunjalo group. Now, why is that? Well, yet another of South Africa's big banking groups, Nedbank, has terminated Survey's own personal accounts along with business accounts of 43 entities related to Sekunjalo. Among them Premier Fishing, Independent Media, Sekunjalo Investment Holdings, and Sagamarta. Nedbank follows Absa, FNB, and Investec. Standard Bank's the other big one, which also has the whole shooting match under review. Nedbank says simply its relationship with companies associated with Survey and the Sekunjalo Group pose unsustainable risks to it. Daily Maverick, by the way, has an excellent article on the whole saga. Reminds us that much of this goes back to the Impati Commission, Commission of Inquiry into Impropriety in the Public Investment Corporation, and its then CEO, Dan Machila. One of the core fiddles, an investment of some 4.3 billion rand by the PIC into Survey's AO Technologies. That company wasn't even worth 1/10 of that at the time. definitely a fiddle of some sort there. The PIC is looking to recoup that investment. Most observers reckon they have zero chance of that. It's already been spent or just spirited away somewhere beyond their reach.
Just like that. Poof, gone. Yeah. Finally, as we look ahead, this week is budget week.
Jerry, yes it is, and I think it's going to be an interesting one. But let's just remind ourselves of another story we talked about last week, that warning from the IMF. I quote from last week's report. The IMF said, the country needs to cut its debt, sort out the state-owned enterprises, and put a lid on the public sector wage bill. So those are the very big headlines to listen out for when the budget comes around on Wednesday. Let's just break them down. The debt question, of course, is massive, but we have been thrown something of a lifeline by better-than-expected tax collections, especially from big business led by the miners. Now, that should allow Finance Minister Enoch Godongwana to lower the budget deficit. Eskom, which owes just over 490 billion rand as the 900-pound gorilla. I don't think a decision's been made yet on how to sort that one out, but eventually it's pretty clear government has to take all or part of that onto its own balance sheet. Now listen out too for the usual suspects, Denel, SABC, Transnet, all of those. And there's an interesting piece on Fin24 from star writer Carol Payton, who says SAA, remember them, SAA is holding its hand out once again for yet another 3.5 billion rand bailout. It needs this apparently to make the deal with the rescue deal with the Takatso consortium fly. Government, of course, is on record as saying no more cash for SAA. So which way is it going to jump? That's going to be worth listening out for. I don't think we're going to get any hikes in personal or corporate taxes. There's no room for that in our economy. No decision either yet on a basic income grant, so I don't think that will change. But one thing is for sure, as always, taxes will increase on booze and smokes. So if either of those are your sins, best to get out and do some stocking up before budget day on Wednesday.
It's like the queues at the petrol station when the fuel hike goes up. You just see these queues outside the bottle stores at the same time. Chris Gibbons, our business analyst, thank you very much for your insight. We'll chat to you once again next week, Monday.
Thanks, Jeremy. Cheers now.
Cheers now. Chris Gibbons with all your insights into business. Only on Mansfield today. We'll catch you tomorrow with our legal eagle, Lance Brogden, in the second part of sexual harassment in the workplace. Look forward to that. Goodbye.